Assalamu alaikum, dear viewers. How are you? Welcoming you from the Southeast University studio. This is Kaji Ashraful Alam and our course code is ACT 522. This is Advanced Financial Accounting. Dear viewers, in this course we will try to explain in brief about the basic concepts and some practice of accounting. In the very beginning of your module, you can see that the lectures parts are divided into several areas. In the first lecture, here you can see that accounting is defined as an information system. Why it is called so? Because you know, in an information system some inputs of data are available and then the data is processed. After that it will have some output which the user can use and to attain their objectives. Since accounting is followed in that same systematic manner, so it is called an accounting as an information system. In the very first lecture, the topics to be discussed are the definition of accounting, its scope, why the accounting is has some distinctions with bookkeeping, who are the user of information of this accounting information, what is the basic difference of accounting information system and management information system, and the last but not the least, why accounting is not science or not arts, what is so. So, you can see that in the definition accounting is defined as an art. It is an art of recording, classifying and summarizing. Why it is called an art? Because the part of the knowledge that helps to attain our objective, this is the theoretical part that we are telling about. So, accounting is an art and this art helps us to record, classify and summarize the significant events that can be measured in terms of money. So, in accounting every event or every item which we should consider as an event should be financially monitored, or it should be explained in terms of money. And in the second phase you can see that we are trying to explain here why accounting is called an information system, because you can see that in every business activities, when the business activities is occurred in a business, it is the result of the decision making. Suppose you are a manager of a company, you are taking some decisions and your decision is then termed to activities, and when these activities will occur, it will have some result and this result will be recorded as data into accounting system. Then accounting again provides some results to make your decisions, and then your decision will again affect your business activities. So, this circle is telling you about the idea why accounting is defined as an information system for decision activities. And in the modern view, you know, the scope of accounting is become so much important that every organizations, like you can see that non-profit, government or any other professional bodies, not only the business organization, everyone, every institutions need some support from the accounting sense. And if you are a manager of a company, you cannot say that without having some ideas or conceptions about the accounting you can proceed. So, the scope of accounting is getting larger and larger, and every organizations involving with the activities of business or non-business should have some ideas, should have some applications of accounting. And bookkeeping and accounting is not that much of different words, because first work is to record and then to analyze. The first part is involved with the bookkeeping, and when we are analyzing the recorded events, this is the part involved with the accounting systems. So, the bookkeeping and accounting actually these are the two areas where bookkeeping is involved with the initial functions and accounting is involved with the final stage functions. the nature of accounting, you can see that there are two types of change may occur in any sort of business. When this change is known as net change, you can see here is an example is given in your module that salary is paid to Mr. Ahmed. It said that when the salary an amount of taka 2000 is paid to Mr. Ahmed, there is a net change of assets from business to Ahmed, and there are other change may occur like structural change, which is defined over here. For example, equipment purchase at you can see that an asset, fixed asset, physical asset, tangible asset is been purchased by the business, and this is the change we can say we can define it as an structural change. Let us now come to a point, who are the users and who uses the accounting information. Here you can see on the page 7 of your lecture sheet that every business activities will result some accounting information, and this information will be used by different bodies. Like when the management is using the information, they are using it in their sense. When the others, creditors or the taxing authorities or the other financial institutions or the other regulatory authorities who are very much interested to know about your information, they are using the information that is provided from the accounting in different way. So, accounting actually provides information to every stakeholders of a business, but the question is who are using the information in which way. So, this is the objective of the related to every individual institutions. So, from the discussion that we have discussed earlier, we can see that accounting work as an information system because it has some events that we can say it as a economic data, and after having that data, these data are recorded, processed, analyzing, processing, and then reported to the concerned authority. After reporting, then the financial information that we have from the systems can be analyzed, can be processed, can be used by other various parties. So, like every information, here you can see that information is intelligence. Information is defined as an intelligence that is meaningful and useful. It should be to persons for whom it is intended. That is, we are saying it is depending on the users who are using the data for what purposes. So, we can define accounting as an information systems because it collects data, events from various internal and external sources, and then this data is processed in systematic manner. So, every definition of an information system is related with the accounting systems that is followed by. So, the basic difference between the accounting information system or the management information systems partly related with the inputs. What kind of inputs are relevant and what kind of inputs are supplied for the processing, and why accounting is called not as science, why it is not defined as arts, because you know in the very beginning of the discussion we said that accounting is an art, because in the theoretical part every financial events are analyzed and then recorded. So, it is basically related with the theoretical part, and when these analyzed data are reported to the concerned authorities, then a systematic manner is followed. So, in that systematic manner, the information that is provided from the accounting system is relevant to the decision making. So, this part is related with the science part, scientifically recording part. So, simultaneously we can define it as a arts or as a science, and that is the reason for defining accounting as an arts and as a science. So, I would like to rather request you, my dear viewers, please very attentively read and go through your questions number 1 and the second part of number 1, why accounting has been referred to as information and generating tool for the users. And the other question is question number 4, who are the users of accounting information? I believe that if my dear viewers, if you are when you can answer these two questions from your book, I can say that the basic ideas of accounting will be clear to you all. And the next part, that is the lecture 2 part of our discussions, is related with the conceptual framework of accounting. Dear viewers, in the lecture 2 of your module, you can see there are some topics, and these topics are mostly related with the conceptual framework, but I believe all of the topic should not be discussed elaborately or enumerately, and the main thing is the conceptual framework, and the other one is the assumption or the principles and other things. And I will try my best to make you clear about the understanding of the conceptual framework and the principles that is written over here. What is a conceptual framework? A conceptual framework is a constitution. You know, every theory, every model, every system should have some constitutions, because on the basis of these constitutions everyone can follow in a same manner, and since accounting is a discipline, it should have some conceptual framework, and in that conceptual framework some principles, assumptions are developed over the years. But the very important thing is to understand the principles of accounting. Here you can see that the accounting principles depend on general acceptance, relevance and reliability, usefulness, cost benefit, constraints. In the general acceptance principles, you can see that everybody related to accounting information should depend on that information that is provided from the accounting system, and it should be relevant, and the user should rely on the information because they believe that this is a procedure, this is a result of a procedure, and the usefulness means that data that is provided from the system is useful to make decisions, and cost benefit means the cost of providing, the cost of making the data useful and the benefit of making the data is not the same. The cost should be minimized and benefit should be maximized from the procedure that is followed to have some information by from as a product of accounting. And the in the next page you can see that for a information to be qualitative, an overview of conceptual framework is depicted, and in the level 1 it is explained in a way that assumption, principles and constraints are included in level 1 of that conceptual framework, and in the level 2 qualitative characteristics of accounting and the elements of financial statements are included, and in the level 3 is the objective of using or objective of having a financial report. And in the qualitative characters of accounting information, you know, the characters are defined distinguished and typed in two ways. The first type is the primary qualities, and the second part is the secondary qualities. In the primary qualities there are two sections that we have already said: relevancy and reliability. Relevant data by relevant quality means predictive value, feedback value, timeliness. Qualitative characters of any accounting information systems, accounting information can be mainly classified into two groups. The first group related with the primary qualities of information, and the second part is the secondary qualities of information. In the first part, primary qualities, there are two important things is focused. Number one is the relevant and number two is the reliability. Relevant means the information that is provided from the accounting system should have the predictive value, feedback value and timeliness, and the other one is the verifiability, representational faithfulness and the neutrality. And in these two sections, it is the important area we should notice that for a data to be primarily qualitative, this data should have some feedback value, that is the thing we can rely on it, and The other part is the comparability and consistency. Here you can have some example, like if you are working in a university like Southeast, and the university accounting department has provided some data to analyze, and how this data is useful, how you can say that this data is useful. You can say, you can prove that when you are comparing this data with other universities data. So, these data should be comparable and these data should be relevant and reliable. Then we can say that yes, these data, these information that is provided from the accounting department is a qualitative data. And primary characteristics of accounting information is mainly depend on these areas, and the secondary characteristics or qualities of a data to be qualitative, the comparability and consistency principle should be followed. And the next topic is basic elements of financial statements. You know that in a financial statements, assets, liabilities, owner's equity, revenue, expense, gain or losses are included. And I would like to request you to collect an annual report from any reputed of any reputed company, and go to the financial statement side. Then you can see that what kind of assets, what kind of liabilities, what kind of owner's equity, how they are recorded, in which manner they are presented, and this will help you to have the basic idea of a financial statement. And these statements basically is prepared on the basis of some principles, because some auditors, some authorities are related to prepare these annual reports, because these reports are very important to the shareholders, to the stakeholders of the company. There are some fundamental concepts which is very important, and these concepts are discussed in brief at the very end of your lecture 2 of your module. And for better understanding, let us have some example. Suppose your name is X and you have just started a new business which is known as X enterprise, and this X enterprise is completely a separate entity from you. You have invested your money in your business, and your business is running your money as a liability account. So, this is the economic entity of the business, and when you have started, you do not want to stop it tomorrow or the day after tomorrow. This is the going concern concept, that everyone starts business to continue it for a lifetime, and monetary unit means every events must be primarily financial and nature, and these events should be recorded. And periodicity means the life of a business can be arbitrarily broken into monthly, quarterly or yearly, any time intervals, and these intervals will help the stakeholders or the interested parties to monitor, to supervise the growth, to supervise the activities of the business in a regular manner. And the principles of accounting related with the historical cost, revenue recognition, matching and full disclosure principles. In principles of accounting, there are some principles discussed over here. You can see the principle number 1 is the historical cost. Every cost, suppose there is a book, if I purchased it with the amount of taka 100, I should record it with taka 100. It does not matter whether the book is now worth to taka 200 or 250 or 150 or less than that. So, the amount of purchase, it is the historical cost concept. The amount of purchase should be recorded. Every item should be recorded at the amount of purchase. And the revenue recognition principle relates to record and report expenses when incurred. Suppose you have advanced taka 10,000 for 10 years to have some equipments or have some assets. Revenue recognition principles relates to the revenue or expenses is in a manner that we have to record and report the expenses when it is incurred, and the matching principle is relevant with the item of recording and reporting the expenses when it is incurred. And full disclosure principle means the accounting body, the accounting professionals should be very much clear, and every information, additional or non additional, should be reported when it is required. So, the other principles are not discussed over here for your better understanding. And the constraints of accounting, it means that accounting processed can be can have some barriers if these points are not if these points are overlooked, like cost benefit, materiality, industry practice, and conservatism. Dear viewers, there are some questions included at the very end of your lectures. I hope that after going through the lectures several times and listening these video lectures, all of you have some understanding about the conceptual framework, and you can easily answer those questions. And this is my belief that you must have some position over your conceptual framework in accounting, and that is all in your lecture 1 of this video session. Thank you very much. Allah Hafiz.